Alright guys, so in this video, I'm going to teach you a very stupid, simple strategy that works with gold. Now, one of my private Discord members got a huge payout by using this strategy alone. And as you can see right here, I'm showing you the picture. And I'm going to explain you the entire strategy for absolutely free. You guys can use it and you can see the results for yourself. The strategy is very simple. All I ask from you in return is that you hit that subscribe button. Just do it right now and hit the like button if it works for you. And come back after back testing the strategy and comment down below if it works for you as well. So this strategy works with gold only specifically, and it is very simple. You only take one trade per day, and then you don't take any more trades. You just stay away from charts and enjoy your time with your friends and family, because one trade a day can basically make you get payouts like the ones that I showed you before. And it is very stupid simple. So first thing first, what you want to do is change your time zone to New York. All right. So whatever timing I'm about to teach you about in this video are going to be based on New York timing, so you don't get confused. Okay. So what we want to do is, first of all, go on to the 15-minute time frame. Okay. And then I'm going to teach you the timing first, but let's just do this. All right, perfect. And this is the closest high and the closest low. Now, I want to do the timing. Time is very important. So this is going to be 8 p.m., not a.m., okay? So what you want to do is before 8 p.m. open, which is Asia session open, you want to mark out the most recent high on the 15-minute time frame and the most recent low on the 15-minute time frame to the left of the open. So before the market, the Asia session opens, which it opens at 8 p.m., you want to mark out the completely formed high and low. It cannot form after 8. Those highs and lows have to form before 8 p.m. So before 8 p.m., we have the low, and then we have the high. Now, after the Asia session open, which is at 8 p.m., you are waiting for price to either sweep out the high or the low. So let's say in this case, the high is swept, okay? Now, what you want to do next is you want to drop down to 1 minute time frame, okay? And that's where we're going to look for our entries. Now, this is very important, okay? So there are a couple of rules that you have to follow. So first thing first, what we're looking for is a market structure shift, okay, with a candle closure. So it cannot be a wick. So we need to see a candle close below this level, okay? Now, the next step is we want the price to ideally close below the high that was swept, okay? So a market structure shift, if it happens somewhere, let's say around here, it is not that high probability because we didn't close back below the range, okay? And price can just simply push up like that. So what we need is a market structure shift first, and then we also need to see a candle close back below the high that was swept. So basically this is a range high and this is a range low. So once we have a market structure shift, once we have closed back below the range, now what you can do is take your entries in different ways. So if you get a market structure shift and price just pushes down way far down, what you can do is mark out a breaker block. So this is the low, this is the high, right? And this is your breaker block right here. Now this could be your entry zone, okay? Now if price goes here and it is starting to reverse back up, then what you can do is take your entry from a unmitigated fair value gap, okay? Or you can take your entry from an auto block that could be around this level, okay? But here's the rule, right? If price pushes way far down, then your only entry zone is going to be the breaker block, okay? Because when price pushes down that far down, there's a very less chance that price will come back towards your extreme fair value gap to the upside. So what you can do is just simply take your entry at the retest, and then you can go for 1-to-2 risk reward fixed ratio, okay? And then you go break even at 1-to-1, and then you can secure one partial as well, because the person that I showed you did also take partials as well. And once you go break even at 1-to-1, you take one partial, then just let the trade running for 1-to-2. And sometimes if your bias is very strong, even though bias is not necessary for this strategy, but if you have a clear bias, then you can hold the trade towards this low over down there, okay? So similarly, this is what it would look like if you're looking for long. So similarly, what you would do is mark out the most recent high and the most recent low on the 15-minute time frame before 8 p.m. open. Now, after 8 p.m., wait for price to sweep out either the low or the high. So in this case, the low was swept. And then again, you would look for a market structure shift, wait for price to close back above the range low, right? And then you can take your entry from a breakup block if price goes way far up, or if it's somewhere around here, then wait for price to come back down and take your entry from extreme fair value gap. Now your stop loss is always going to go below the low over here, okay? Not far down, not far up, just below the low. Stick to the basics and you're going to see the results, okay? So there are some key rules that you need to know. So your entry must be before 12 a.m., okay? So it must be before 12 a.m. So let's just do like this, okay? Even though it's p.m., but 12 a.m., okay? So that's when basically we have the Asia session finished. So we are then not like looking for trades after this time period. So if you can get your entry around this time window, then that is perfect. However, when price sweeps the most recent low or high, you start looking for your entries and you're not looking at anything else around here. You're not looking at fair value gaps. You're not looking at anything. You're just following the algorithm that operates at this time. It's a very specific time. So now that we know the strategy, I'm going to give you guys some examples and then I'll end the video. All right, everybody. So this is example number 1. And one thing I need to tell you guys about is that the most recent high and low that form have to form after the New York session of the previous day. So from here onwards, we have to look for the most recent high and low. The low and high cannot be inside the previous day's New York session, right? And also one key thing to note is that this is like 1959 right now. So look at here very closely. So we had this high that is swept, okay? And then we only have this low down there. But then we also have this high over here. So if the closest high is swept already before the market open, then you refer back to the second most recent unswept high. And in this case, we have this high over here because this high was swept simply before the Asia session open, which is the 8 p.m. Now, if I skip ahead, you're going to see that we take out this high over here. Okay. Now let's drop down to 1 minute time frame. Now we swept it over here. We don't have a market structure shift. We don't have anything at the moment. So now what we do is wait for a market structure shift. Now, if you look at here very closely, you can see we had this low over here. So this is a low, right? And then we also had a high, low, high, right? So we have a market structure shift right now, but we haven't closed back below the range that the range high, right? So we need to wait for price to close back below the range. So right here, we have a closure. So now since price has went way far down, what we can do is just take our entry from a breakup block. And then this would be your entry zone. This is your breaker, right? And then if I put my short entry tool here, put my stop right above the high, and then you can just go for 1 to 2 risk to reward, and you'll see how this plays out. Price taps into the zone, and then we push down, okay? Very simple stuff. And then it could have probably went towards the Asia low as well. Now, considering the break-even rule, right? You could have secured one parcel at 1 to 1, and then you would have probably got close at break-even, which is totally fine. But then you can see how price went down. I wanted to show you this example because you can get close at break-even, but the risk management is different for every single person, right? If you don't want to go break even, that is totally fine. It's really up to you. But personally, I prefer to always go break even at 1 to 1 because it is safe in the long run. Let's move on to the next example. All right, guys, so here's example 2. So we are at 8 p.m. open and we have the most recent high and the most recent low down there, right? So now what we're waiting for is price to sweep either the low or the high. So if I skip ahead, you can see that we swept the low, and right away what we have is a market structure shift, right? Now you simply wait for a fair value gap formation, and then we have our fair value gap right there. Now you could have entered directly from here, but then let's just say you had a limit order right there, and you simply just go for 1 to 2 risk to reward ratio, and let's see how this plays out. So we get a tap, and then we push up towards the full TP right away, and price just kept on pushing up. Okay, now if you didn't take this market structure shift, you could have taken this here as well, but probably you wouldn't have gotten tagged here unless you took your entry from this fair value gap. But this was a perfect entry. Even though it is a single candle, it is also a high, and in that case, that can work perfectly. Okay, so let's move on to the next example. All right, guys, so here is another example. So you can see at 1959, we don't have any recent lows, right? After the previous day New York session, we only have a high. So in that case, we'll only be looking for a sweep of this high over here. So if I skip ahead a little bit, that's when we have a sweep. Let's then drop down to 1 minute time frame. And let's look for a market structure shift. So market structure shift. So this right here is our market structure shift level. And right here, we have a market structure shift, right? And we also came back and retested this fractal breaker, but the real breaker block is around here, okay? So that is going to be your entry zone. You're going to take your entry at the retest of the zone. You're going to put your stop right above the high, and then you can target 1 to 2. So let's see how this plays out. So right there, I believe, right, okay, still not there. Did we hit the full TP? Okay, yes, we did actually hit the full TP, but it just kept on going down. Now you can see that you hit 1 to 1 around here. So you would have taken one partial here, probably could have gone break even, but then you can see price went down. And I think it went down towards the Asia low, if I'm not wrong. And yes, it did. So yeah, so let me give you guys one more example and then I'll end the video. All right, guys, so here's the last example. We are at 1959 right now. And you can see we had this low before, but it is swept before the 8 p.m. open. So what we have now is this low over here and this high over here. So let's see what happens. So market opens here. Sorry, the Asia session opens here and then we push up. Now let's drop down to 1 minute time frame. And let's wait for the algorithm to kick in. So we wait for price to sweep the high, and right there we have a sweep of the high. And right away what we have is a market structure shift, and then you have your breaker block as well around this area. Okay, so then you can simply take your entry from the retest, put your stop above the high, or if you want to be a little conservative, then you can put your stop above the breaker block, but I usually put it above the high. And then you can simply target 1 to 2. Now, key thing to note is that before your entry, if price takes out the opposite low, then in that case, the setup becomes invalid, okay? So let's say that price just pushes down, takes out the opposite low that we marked out, and then comes back to your entry zone. You then don't want to take that entry because it is risky, okay? So let's see how this plays out. We get a sweet retest over here, and then eventually we just push down, and that was absolutely beautiful. I believe it got stopped at break even as well, if I'm not wrong. Yeah, so if you went break even at 1 to 1, this might have closed you out at break even, which is totally fine. You know, at the end of the day, profit is profit. You take one partial at 1 to 1. But if you didn't go break even and you were just going for full TP, then you could have done that as well. Again, it really comes down to personal preference. I don't have like a fixed rule if you want to go break even or not. It really comes down to you and how you can manage stress, emotions when you are in the trade. If you're okay with, you know, price reversing on you, then it's totally fine, because in the long run, you're going to stay profitable, okay? The equity curve is going to look something like this, okay? So if you have a very good psychology, then you don't really need to go break even. The only reason why, personally, myself, I go break even because I have this weakness where if I see the price going down, I've seen price just reverse, okay? And that just hurts me a lot. You know, I would rather just lose the trade right here than losing a trade when it hits the, you know, the break even zone and then it reverses. So that kind of sucks for me. But yeah, guys, that is going to be it for this video. And you can see price just kept on going down. Again, go and test out this strategy. Test out if you want to test out the different like risk management. If you go break even, what results you get. And if you don't go break even, what results you get. You know, my job here is to teach you what really works. And, you know, my students have been trading this strategy for so many months now. But at the end of the day, I want to leave the rest of the work for you guys. Go back test, because I can tell you that strategy is profitable. But if you don't have confidence in the system yourself, then it might not just be for you. So you need to build confidence around this strategy, this model. And once you see the results and the data collected, then you can trade this model. I'll see you guys in the next one. Take care. Goodbye.